This one candle trading strategy can basically change your life. Now, I have taken another live trade this morning along with my Discord members, and in a minute, I'm going to show you the recap of that trade. So essentially, the candle is the 10 a.m. 4-hour candle. Now, this candle specifically, it's going to provide you with a very good power of 3 setup. And in this video, I'm going to teach you how to catch the accumulation phase, how to catch the manipulation phase, and how to actually trade the distribution phase. You have to first identify the accumulation phase, and then you have to actually identify the manipulation phase correctly, because there are going to be manipulations everywhere. You need to find out which liquidity sweep is the real one. And then finally, we'll use our confirmations to take a trade to the upside. So this is the 4-hour candle, right? But on the lower time frame, this is what it's going to look like. So we have the open, price opens, it accumulates, it then manipulates, and then it distributes. So the lowest manipulation point is here, the wick. So 95% of the candles have a wick. And with that information, what we can do is try to catch a trade around the wick area and then utilize the entire move to the upside. Now, let's move on to the strategy. But before we do that, let's watch the recap in a few seconds. So as you can see that the take profit was hit, and I do this live every day with the Discord members. So first thing first, what you want to do is mark out the opening price of the 10 a.m. candle. Now this works specifically for NQ and gold futures. It also works with ES and Dow Jones, but I primarily trade it with NQ because there's a lot of volatility and I can catch big moves. You do not need daily buys for this. However, if you implement it, you're going to see good results, but it is not necessary because this alone can give you very nice results. So first thing first, what you want to do is mark out the opening price. Once you have marked out the opening price, right, you have to then drop down to a lower time frame. Now this could be either on the 5-minute or the 1-minute. I usually stick to 1-minute time frame, right? So after the open on the 1-minute, first of all, what I want to do is look for the very first market structure shift. Very first market structure shift above or below the open, okay? So if we have the opening price here and we see a market structure shift above the opening price, which is around here, right? So we have a higher high, higher low, and then a market structure shift. Right, so our first mission from here onwards is to identify and measure the manipulation phase, where it's going to end, and from where we can start looking for trades. So accumulation phases, they are very simple to identify. Now these comes in different shapes and sizes, so we can have like a trend line accumulation, or we can have like a support and resistance accumulation. It doesn't matter, okay? All you have to do is look for a market structure shift above the opening price or below. So here we have the market structure shift above the opening price. Now the next step is measure the manipulation, because the first move is going to be the manipulation after the market structure shift, okay? So go here and choose Fibonacci retracement. Now use your fib from the last high that was formed to the last low that was formed before the market structure shift. Right? So we have a high and a low, and then we had a market structure shift. Now you want to copy out these settings, right? 0, 1, -2, -2.5, -4, 0.5, -1.5, and -1. So the manipulation phase is usually going to end at -2 and -2.5 of standard deviation. That is from where price will look to distribute higher. Okay, so when price reaches a -2 and -2.5, you can expect a distribution phase starting. But this is not all. We have to look for some other confirmations as well. Now, a extra confluence that you can add is a PD array. So if there is a 5 or 15-minute fair value gap around this area that is overlapping with the -2 and -2.5, then that is very good, okay? That is very good. However, it is not necessary, but it is very good. Or we sweep some form of like major high and low, and that is well as well. But the most important part of the strategy, literally the most important part of the strategy, if you miss out on this, then this is not going to work for you, is SMT divergence around the -2 and -2.5. So as soon as we touch -2, we start looking for SMT divergence. What is SMT divergence? So we have to look for correlating assets. So if we are trading NQ, we have to look at ES. So if ES fails to create another lower low like this, right? And NQ, however, made a lower low, lower high, lower low, but ES failed to do so, lower low, lower high, and then we didn't get another lower low. That is SMT divergence, okay? In simple words. So the next step, and which is very important as well, is that you have to, let me just mark this out real quick so it's easier for you to understand. The next step is that you have to look for change in a state of delivery or market structure shift, okay? Now, if you want like a very strong confirmation, you go for market structure shift, but I usually go for with CIST. I'm not going to go over what is CIST. There are a lot of videos on my YouTube, guys. Please watch them. I don't want to waste your time. So after CIST, you can basically take your entry from the retest, okay? Now, this is pretty much it, okay? If we are in the -2 of standard deviation, and also keep in mind that the SMT must form below the opening price if we are looking for longs, right? So when price is below the opening price of a specific candle, that is considered to be in a discount, okay? And when price is above the opening price, that is considered to be in a premium, okay? So we ideally want to buy below the opening price, okay? We ideally want to be buyers below the opening price. However, if you miss the first entry, we have a silver bullet zone. So to measure our take profit level, we're going to do the same thing from the last low to the last high before the market structure shift, right? We use our standard deviation Fibonacci from last low to last high, and it's going to give you the target levels, -2, -2.5, and we also get -4. Now, the distribution phase is usually going to extend towards -4, so we can hold our trade till here if we have a clear draw on liquidity that is overlapping with that number. So if we have some clean equal highs, right, that are overlapping with the -4, that could be your target. However, if you want to play it safe like I do, you can just target the -2 here. Now, the most important thing, if we miss out on the first entry, let's say you didn't get a retest, now you can take a silver bullet power of 3 entry, so -1 and -1.5. If price goes in between this number, not above the -1.5, but in between, and then there is a fair value gap that is close to it, so the very first fair value gap that is close to it, you can utilize that fair value gap, and then you can ride this move to the upside. Because once price goes towards -1, right, that is your silver bullet. Price is going to push up like that. So what you can do is just target the -2 and -2.5. Simple as that, guys. And if I invert the chart over, this is exactly what it's going to look like if we turn it into a bearish candle, right? So we have the open, right? We look for the market structure shift, in this case, below the opening price. So if you have a market structure shift below the opening price, so I'm looking for a valid market structure, right? This fractal, lower low, lower high, lower low, and then a market structure shift. Not something like this where we have this and then we have this. So we have a lower low and then a higher high, higher low, higher. No, that is not a valid market structure shift. You don't want to trade that. The valid market structure is this fractal, lower low, lower high, lower low, and then a break of lower high. So in this case, in this bearish example, first of all, we want to measure the manipulation phase, right? So this is the open, price accumulates, and then we get a market structure shift. Now, the first market structure shift is going to give you measurement for the manipulation, where the manipulation is going to end. So use your fib from the last low that was formed to the last high before the market structure shift, and then at -2 and -2.5, you can look for distribution phase, right? And to do so, what we have to do is look for SMT around this area, and then we have to look for a market structure shift, and then we can take our entries, and then we can target the -2 and -2.5. And again, if there is a liquidity overlapping with the -2 and -2.5, that could be your target. Or if there's liquidity around -4, that could be your target. So now that we know about how to trade this strategy, let me give you guys some examples. All right, everyone. So I'm going to break down the trade that I took today live with the Discord members. So this is the opening price. This is the 10 a.m. open. So you want to mark out the opening price. Now, usually what I would do is wait for a market structure shift after the open to identify like a manipulation phase. But in some cases, what I would do is look at the past price action and see if there's like a major market structure shift that happened. And after that shift, price is heading down. So if I look to the left here, what I can see is that we had this market structure shift. Now, over here, what you can see is that if I use my fib from the last high to the last low before the market structure shift, we are getting some projections, right? We are getting -2 and -2.5 over here. Now, we have the open here. If I had a market structure shift, a clear fractal like this, where we have a higher high, higher low, and then a higher high, and then a market structure shift, I would look at the most recent market structure shift. However, when I saw that price was pushing down and was not giving me a market structure shift, I knew that price was already manipulating before the 10 a.m. open. So with that in mind, what I did is I used the standard deviation from this high to this low. And when I got the negative two projections over here, I look for SMT divergence, right? So I look for SMT divergence. So let me just quit the Discord real quick. Okay, so you don't hear that sound. So if you guys look here closely, what you can see is that we had SMT. So NQ made a lower low, it swept that low, but ES failed to sweep that low. Now, at this point of time, I was just looking for a change in the state of delivery, okay? So these consecutive bearish candles, they swept liquidity, okay? They swept this low. So what I want to do is wait for price to close above the body of the first candle of these consecutive bearish candles. That is your CISD. Now the entry was at the retest, right? My stop was around here. And honestly, I just went for 1 to 1.5 in this case. And I'm going to explain why I did that. Now, the reason why I did that, because today it was CPI and it was just not looking good. The overall price section, I thought that price has distributed down so much. So it's very unlikely that we'll see another push, but I was wrong. And price actually just pushed up. And notice how price reversed from the -4 of standard deviation, right? And that's it, guys, from -2 to -4 or to -2.5. Now, I could have targeted -2 here, and it would have given you 2.64, but I just want to keep things simple for today, especially because we had CPI, and I wasn't expecting this big move. But that was it. That was a very quick scalp trade, guys. Absolutely beautiful. And notice how it just played out to the tick. After -4, we reversed down. So let's move on to the next example. Example 2, and this happened yesterday. Did it happen yet? Yeah, it happened yesterday. So we have the 10 a.m. open. As you can see, I've marked out the opening price. So now we are looking for a market structure shift below the opening price or above to identify our manipulation phase. So we didn't get a market structure shift here, right? We just opened and then we pushed down. So this is not a valid market structure shift because, as I said, we need a fractal like this. Higher high, higher low, and then a higher high, and something like this. We didn't get it. So over here, what you can see is that we push down, right? And once we push down, what I looked for is this. So I used my fib. After here, we didn't get a mark. Actually, we did get a market structure shift, as you can see here, but I'm not sure if price actually went towards the -2, and no, it didn't by far. So what happened here is that we went down, we went up, right? But then after that, we got a market structure shift around this area. Right now, in some cases I would use it like this, but it's very rare, so I wouldn't suggest you do that as well. But if I use my fib from the last high to the last low, you can see it's still projecting here. But what I did, I saw that the wick is too big. So when a wick is too big, guys, you always want to use your last point at the body instead of the wick. Otherwise, it's going to give you fake projections. So if you see a wick is bigger than the body itself, in this case, right, you want to keep it at the body. And then over here, you can see we have -2 and -2.5. Price taps into that zone. And let's see if we had SMT divergence. So if I go here, you can clearly see is that we have SMT divergence. So let me show you. So right here, you can see price took out this low on NQ, but on ES, we failed to take out that low. So you can see we couldn't take out that low on ES, but we took out that low on NQ. Now we had the change in the state of delivery right here. So you can see this candle specifically swept this low over here, right? And also this low over here. And after that, we wait for change in the state of delivery. We take our entry from the retest. And now you can do two things here, guys. You can either go for 1 to 2 risk reward, which is sometimes I like to do, okay? Or you can just hold the trade. So for example, you can just measure the fib from the last low to the last high. And then you can see price went to -2 to the point, to the tick, and then it probably reversed. I'm not sure. Yeah, it kind of just reversed down, but then I think it just went to -4. I'm not sure, but our job is done here, right? So again, we open here, we look for a market structure shift. The market structure shift happens here. The fractal that I was talking about, it happened here. We tap into the -2 and -2.5. We get SMT. We get change in the state of delivery. That is pretty much it. And let me see if we had some PD arrays. So a PD array could just be the significant low down there that was swept, and also like this auto block over here. So that was absolutely beautiful. Let's move on to the next example now. Final example. So over here we have the opening price 10 a.m. right? 10 a.m. open. Price goes down, and then if you look closely, what we have is this fractal, right? On the lower time frame, even on the 1 minute, we have this. Okay, so this is valid. You can clearly see this high was formed after the third candle went lower than it. So it's not something like this. It's not this, but it's this. Okay, it's something like this. So what we do is first mark out the first market structure shift. So from the last low to the last high, you can clearly see this is a high over here, right? And then around the -2 and -2.5, we didn't get any SMT. Okay, we couldn't find any SMT. So the ideal place for us to look for SMT would be around -4. Okay, so around this area, around the -4, what we see is that on NQ, price fails to take out this high, but on ES, we already took out that high. So somewhere around here, honestly, it was just, and then even though we might have gotten an SMT around this area, but we just never got like a market structure shift or CISD that would confirm the SMT, right? But at -4, you can see we failed to take out that high, but on ES, we had taken out, on NQ, we failed to take out that high, but on ES, we took out that high. So now after that, what we would do is look for the CISD. So this candle specifically swept this high. So this would be your CISD level. And right here, you can see that we got a CISD, right? And your entry could have been here or at the retest. So if you took your entry on the retest, that is well and good as well, right? And then you can potentially target the -2, which is around this area, right? -2 here. And then you can see price goes down and taps into the -2 to the tick, and then it reverses.